You think you know how much tax you pay. You look at your paycheck, you see the number taken out, and you think, that's it. That's what the government takes. Here's the problem. That number is maybe half of what you actually pay. The average American sends close to 30% of their total income to various governments, federal, state, and local. But most people only feel about 15% of that. The rest is hidden. Built into your grocery bill, built into your rent, built into the price of gas, built into the value that quietly disappears from your savings account every single year. This video is about those hidden taxes, the ones that nobody reads you a list of, the ones that don't show up on your W-2. And the reason they exist and stay hidden is not an accident. Think about your last paycheck. You earned, say, $4,000. Maybe $3,200 hit your bank account after federal and state income tax. You thought, okay, I paid about 20% in taxes. I know what I owe. But then you went grocery shopping. You paid sales tax. You filled up your car. You paid gas tax, and you almost certainly didn't notice it. You paid rent, and your landlord passed their property tax along to you in that monthly number. You bought a beer. You paid an excise tax. You got a raise of 3% this year. Inflation was 4%. You lost money silently, and nobody called it a tax, even though it worked exactly like one. By the time you add it all up, the average American household pays somewhere between 27 and 30% of their income across all these different systems. That is not a fringe estimate. That is what the Tax Foundation and the Congressional Budget Office both show when they account for every layer. The number on your paycheck stub is just the beginning. Here's how hidden taxes work. A hidden tax is any cost that reduces what you can actually buy without ever being labeled as a tax. There are two kinds. The first kind is a tax you pay but don't see. Sales tax is a good example. When you buy something for $100, you pay $108 or $110 depending on where you live. You see that number. You might not think of it as a tax, you think of it as the price. But it is a tax, collected by the state government, added at the register. The second kind is harder to spot. It's a tax that reduces the value of money you already have. Inflation does this. If you have $1,000 in a savings account, and inflation runs at 4% this year, that $1,000 can now only buy $960 worth of things. You still have $1,000. The number didn't change, but the purchasing power quietly shrank. No one took that $40 out of your account, but it's gone. That is the mechanism. And once you see it, you'll start noticing it everywhere. Meet Marcus. He's 34 years old, lives in Cincinnati, Ohio, works in IT support, and makes $58,000 a year. Marcus thinks of himself as a reasonably informed person. He files his taxes every April. He knows his federal bracket. He knows Ohio has a state income tax. He thinks he pays about 22% in taxes. He's off by a lot. Here's Marcus's actual tax picture. Federal income tax, about 12% effective rate on his salary. State and local income tax, around 4%. Payroll taxes, Social Security and Medicare, come out of every paycheck at 7.65%. That's already over 23%. And we haven't started yet. Marcus spends about $400 a month on groceries and household items. Ohio has a 5.75% state sales tax. That's roughly $23 a month, or $276 a year, just in sales tax on everyday purchases. He drives to work. Federal and state gas taxes add about 57 cents to every gallon he buys. He fills up twice a month. That's roughly $15 a month, or $180 a year, that never shows up on any tax form. Marcus rents an apartment for $1,200 a month. His landlord pays property taxes on that building. Those taxes are built into the rent. Marcus is paying them. just indirectly. In Ohio, effective property tax rates average around 1.5% of property value. On a building worth $250,000, that's $3,750 a year. Spread across an apartment building with multiple units, a portion of that flows through to Marcus every single month. He just doesn't see it as a line item. Then there's inflation. In 2022, the United States hit over 8% inflation. Marcus got a 3% raise that year. His employer thought they were doing him a favor. But in real terms, Marcus took a 5% pay cut. His salary went up in dollars. His life got harder. Nobody called it a tax, but the effect was identical. When Marcus actually adds it all up, income taxes, payroll taxes, sales taxes, gas taxes, embedded property taxes, and the inflation that eroded his raise, he isn't paying 22%. He's paying closer to 35%. The number on his W-2 was never the full story. Marcus is not unusual. Every layer of the economy has a hidden tax buried inside it. Think about your phone bill. Federal, state, and local governments add somewhere between 20 and 25% in taxes and fees on top of the base rate for many wireless plans. Those aren't hidden in the sense that you can't find them. They're on the bill. But most people don't read that section. They see the total and they pay it. Think about buying a car. You pay sales tax on the purchase price. You pay registration fees, which in many states are calculated as a percentage of the car's value. You pay gas taxes every time you fill up. You pay excise taxes on motor oil, tires, and car parts. By the time you've owned a car for 5 years, the tax load on that vehicle goes well beyond what you paid at the dealership. Think about alcohol. A six-pack of beer in the United States has federal excise tax, state excise tax, and sales tax baked into the price. Most people think they're just paying for beer. They're also funding 3 levels of government. The same goes for airline tickets. A $200 flight might carry $60 to $80 in taxes and government fees. The Transportation Security Administration fee. The passenger facility charge. Federal excise taxes. That's 30 to 40% of the ticket price going directly to governments. The airline shows you a base fare. The checkout page shows you something different. These taxes are legal, often disclosed, but they are designed to blend in. Think about your internet and cable bills. In many states, telecommunication services carry special taxes and surcharges, universal service fees, state utility taxes, city franchise fees that can add 15 to 20% on top of whatever rate was advertised. You signed up for a $60 a month plan. Your bill is $72. The difference is taxes with different names. Think about hotel stays. On top of the room rate, cities and states layer on hotel taxes, tourism taxes, and occupancy taxes. In major cities, these can push the effective tax on a hotel room past 20%. The listed price and the checkout price are reliably different. Think about lottery tickets. State lotteries are, in economic terms, a tax on optimism. The government collects every dollar that isn't paid out in prizes, typically around 50 cents of every dollar spent. People who play the lottery regularly spend money on it that they might otherwise save or invest. It is a voluntary tax. But it is a tax, and it is sold as entertainment. Because if every tax were visible and labeled, people might ask harder questions. There's a second force that makes this worse. It's called bracket creep, and it works like this. The United States has a progressive income tax. Higher income means a higher tax rate. That sounds fair. But here's the catch. When inflation is high, wages tend to go up. Not because you're earning more in real terms, but because everything costs more, and employers nudge salaries upward to compensate. So your nominal salary goes from $55,000 to $58,000. In real purchasing power, you're about the same as before. But on paper, you now earn more dollars. And more dollars can push you into a higher tax bracket. You pay a higher percentage. Even though your actual living standard didn't improve, the government collects more revenue. No new law was passed. No politician gave a speech about raising taxes. It just happened automatically, because the bracket thresholds didn't move fast enough to match inflation. The IRS does index federal brackets to inflation each year, which limits this effect at the federal level. But state and local governments are inconsistent about this. And payroll taxes, Social Security, and Medicare are a flat percentage, so they rise with every nominal dollar you earn. Bracket creep is not a conspiracy. It's just a structural feature of how tax systems work when inflation is high. But the effect is real, and it falls hardest on the people in the middle. The workers who get cost of living raises that look like pay increases, but are really just keeping up. Here's why all of this is built the way it is. Governments need revenue. That is simply true. Roads, schools, the military, Social Security. None of it runs for free. The question is not whether taxes exist. The question is which taxes are visible and which are not, and who designed that distinction. Income taxes are visible by design. They require you to file a return. They produce a refund or a bill. You feel them. Sales taxes are visible at the register, but they blend into the total. Gas taxes are buried in the pump price. Most people have no idea they exist. Property taxes embedded in rent are functionally invisible to renters. Inflation as a form of wealth erosion gets called an economic condition rather than a policy choice, even though monetary policy directly influences it. Economists have a concept for this: the difference between statutory incidence and economic incidence. Statutory incidence is who the law says pays the tax. Economic incidence is who actually bears the burden after prices adjust. A property tax is legally owed by the landlord. But economists consistently find that a significant portion of it gets passed to tenants through higher rents. A corporate tax is legally owed by the company, but some portion gets passed to consumers through higher prices and to workers through lower wages. The line between who pays taxes and who actually pays is blurrier than most people realize. And that blur is not a design flaw. It is, in many ways, the design. Here is the counterintuitive part. Higher-income Americans often pay a lower effective total tax rate than middle-income Americans when hidden taxes are included. This sounds backwards. The wealthy pay higher income tax rates. That part is true. But income tax is only one layer. Sales taxes, gas taxes, and excise taxes take a much larger percentage of a lower income than a higher one. If you earn $40,000 a year and spend most of it on everyday purchases, a 6% sales tax eats a significant chunk of your real income. If you earn $400,000 a year and invest a large portion of it, much of your money never touches sales tax at all. This is what economists call a regressive tax. The rate is the same for everyone, but the impact is not. A 2019 study by the Institute on Taxation and Economic Policy found that the bottom 20% of earners pay about 11% of their income in state and local taxes. The top 1% pay closer to 7%. At the state and local level, where most of the hidden taxes live, the system is actually more burdensome on lower incomes than higher ones. The progressive federal income tax partially offsets this, but it doesn't erase it. When you total everything up, the U.S. tax system is considerably less progressive than most people believe. The visible part, federal income taxes, tilts toward the wealthy paying more. The invisible part, the taxes embedded in daily life, tilts the other way. So here is what you are actually paying. Income tax on your wages. Payroll tax on your wages. On top of that, sales tax every time you buy something. gas tax every time you fill up. Property tax, directly if you own, indirectly through rent if you don't. Excise taxes on your phone bill, your flights, your beer, your car. And inflation, which isn't called a tax, but works like one, quietly reducing the purchasing power of every dollar you save. Add it up, and for a typical working American, the real number is somewhere between 27 and 35% of income, not the 15 or 20% that shows up on the paycheck stub. The paycheck stub is the part they show you. The rest is the part they built into the price of everything you buy. You were never just paying income tax. You were paying all of it. You just weren't seeing all of it. And now you are.